GM everyone, welcome back to another episode of Touch Trust Podcast. We're back with Hansolar from Lighter. We've had him on, I think, a couple of weeks or 1 month before the TGE, and we talked all about plans for TGE with Lighter EVM and RWA listings and whatnot. And some of these things are live right now, and many more to come as well. So we thought it's kind of fitting to have him on again and to discuss what's Lighter been up to, and also as Hansolar is one of the best traders on CT, also get his thoughts on some of these market volatility, headline terrorism. Uh, but yeah, Hansolar, welcome back.
Hey guys, thanks for having me back again. It's been a pretty tumultuous couple of months, so lots to catch up on.
100%.
100%.
Do you want to talk a little bit about, let's talk a little bit about the TGE experience, obviously an iconic day for every team. How was that, and how's team sentiment right now? How's it been evolving?
Yeah, so um, I think if you've been tracking kind of lit prices from before the TGE and after TGE, I think everybody knows how there was like a huge amount of buildup and hype into the TGE, and then some lackluster and some to be frank, disappointing price action afterwards. Um, but the TGE itself, like technically, there was a lot of kind of worry about whether it would be smooth, but I think the team proved that it was a very smooth event. Like I don't see any technical kind of complaints about people not being able to get their tokens. No downtime, and it was a great distribution event technically. We distributed I think to 300,000 different accounts that have been trading on Lighter, and so that was obviously like a very significant milestone. Um, and then afterwards, obviously, I think markets were also not you know uh, in the best conditions from the start of the year. Including geopolitical kind of tensions rising and such things. Um, and so the lighter prices have been quite up and then down quite a bit afterwards. Obviously, like that does affect like team members. They are human, and it's sometimes hard to build in a space like crypto where everyone is super opinionated and everybody's fighting for their bags, right? And so it's understandable, like some of the kind of banter that gets passed around. But nevertheless, I think the team has been heads down, like just releasing products as quickly as they can. There were a whole bunch of releases post TG as well, including things from uh, you know lit utilities where you can stake it and then get access to LLP. We launched a whole bunch of RWA products. We also launched like a funding rebate program, which I don't think anybody else has done, but is also kind of a good way for kind of longer swing traders to get rebates on their positions. And then mobile as well. The mobile app also got launched. So I mean, the team is like super busy and have been just kind of heads down, pushing things out since the TG.
Yeah. I've been noticing Vlad is just retweeting right now. Like he seems really locked in. Like I think I have notifications on for Vlad, and he finally posted yesterday for I think the Innovation Advisory Committee of the CFTC. Was a tweet after a long time. It really seems like the team is like locked down, getting all these RWA perp listings out. But before we get into like a lot of these lighter specific things, Hansolo, what are you looking at from like the market point of view? Like obviously you said we're in like gloomy times. Start of the year was horrible. How are you positioning yourself as a trader who sort of looks at all these different markets?
I mean, I have reduced exposure to my account by quite a bit. My New Year's resolution was reduced drawdown. That was like the single thing that I wanted to keep throughout this year. And from my trading accounts perspective, like taking out money was the best thing I could do. I think, you know, when there's increased like risk, especially on the macro side of things, like I think crypto traders kind of have to understand that you don't have any edge there. You know, we had a lot of rotations in that sector as well, where it went from, you know, the hyperscalers, and then it went to, you know, like gold and silver, and then it went to like Korean stocks, like down the supply chain. And you know, money has been rotating really quickly, and then there's also like the wild card of Trump that he is, also adding like an extra bit of entropy to the markets. So if you think that you can kind of like outtrade the professionals in that market, I think, you know, you're being a bit ambitious. And so I think, you know, the smart thing to do for a crypto trader that's looking to like branch out into real world assets like stocks and commodities, I think the best thing is to start small, see if you actually do have edge, and then, you know, increase the aggressiveness afterwards. So bearing that in mind, right now my positioning is mostly it has been mostly long gold and short alts. I was lucky enough to like get out of my long gold positions before the huge crash, but I've got back in, so that was like a very lucky kind of timing thing on my side. And more on like the shorter time frame, I'm actually quite constructive, even though, you know, Bitcoin is kind of looking like a, you know, I think 2022 kind of bear flag situation where like it's like, you know, huge down days, chop, huge down day, chop. You know, it's like I think everybody's reminded of that fractal, and it kind of looks like that is happening now. But I think there is like a structural kind of story here where MSTR and its preferred stock, the STRC, is providing like systematic kind of a strict structural bid to the market, after having washed out a lot of sellers. So I've gotten long Bitcoin again and a few leaders. So that's my current kind of positioning.
Yeah, I think I saw a tweet on it like yesterday. I think the simple kind of sum it up how to play this market is get out of the way in terms of shorting when sale is in the books, where STRC is at 100 and they're issuing new ATM and they're bidding billions every week. And when he stops, just short it and you just slow bleed back into the range, or else, you know, short Monday and just it slow bleeds and something again happens on the weekend, and keep repeating that. And it feels like it's working every time, you know. And last at least since we kind of uh, bounced from 64 or something. But Hansolar, one thing that's kind of made me uh, I thought, you know, we had this commodities rush, everyone was trading silver, gold, and then we had this equity rush. Everyone was like, you know, Nvidia earnings, let me just long it on hyperliquid and lighter and whatnot. And now people are, playing with instruments like oil even. So, how do you think, like, you know, we've seen uh, crypto account called PP Poo Poo guy kind of become the main character for a couple of weeks, and everyone is trading oil. Even though I think the oil trade was done like 2 weeks ago, where it went to 120, it crashed to 75, and again it shot up, and I think that was done. Whereas now everyone is just risking one Trump headline away from either making a lot of money or getting wiped out kind of situation. What are you seeing in terms of crypto traders, even on lighter, like in terms of how they are pivoting from just alts and majors to some of these other equities and RWAs, where even you guys are listing them almost every day now?
So sorry, like what's the question?
So I think to sort of summarize the question, earlier when there weren't these opportunities on chain to trade oil or gold, this is like a very new phenomenon, and I would say it's more this cycle than last cycle. Do you think crypto traders are enticed to trade these assets now because they're available, or is it more there's nothing happening in crypto and earlier they would trade these assets using other instruments, but now since it's on chain, we're seeing all this volume. So like I think the TLDR question is, has this volume always been there, or is this like a net new market that crypto has enabled?
Well, I mean, like in previous bear markets, we were betting on hamsters during the bear market, right?
That was actually better, honestly. That was actually better.
So we were betting on some pretty random outcomes, right? I guess most people kind of became just the gamblers. But now with RWAs having sufficient liquidity on chain and having been perpified, right? I think it's kind of been unlocked. Like the trading activity of these RWAs have been unlocked on chain, and obviously Hyperliquid has been leading the charge on that front, and it's pretty kind of pretty amazing to see TradFi quoting Hyperliquid like oil prices over the weekends where it's doing like hundreds of millions of dollars. It's it's like the unlocks that we kind of always talk about, in like the big conferences. We're always talking about like, oh, like DeFi is going to unlock this and unlock that, right? This is like the unlock, right?
Actually happening.
It's like happening like right in front of our eyes. And so, I mean, I'm pretty kind of really happy to see that happening, to see both like native crypto traders as well as like perhaps a new kind of cohort of people also coming on chain to trade these things.
And I think one of the edge that crypto people have is they are exposed to so many of these cycles within cycles that they can kind of adapt very quickly. And because it's 24/7 market and most of these we are all chronically online, we are the first to kind of react and kind of see what's happening. And I think many people caught the oil trade very well. And many of them were early to the circle as well. So it's kind of fascinating how fast crypto investors and traders can adapt, even though sometimes it's like we are topping every market we list. But yeah, it's kind of fascinating, and as you said, right, like someone longing 100 million in gold, and even though they might be hedged on their trade fi book and they're just collecting funding, even that is kind of a new thing that we haven't seen before. And maybe that's what will drive like more some of these bigger players from trade fi come on board.
Yeah,
But
I think
back to the one question on your trading style. I've seen like you're putting on a lot of these pair trades. I see that you use pair protocol as well. Uh, is that something you would recommend people as well? Like select a few things that are always weak, select a few coins that are strong, like hype and maybe right now Tau or something. Is that what you recommend to kind of navigate this bear market?
I think everybody has to find their own style. I mean, I have made and lost a lot of money just being one delta, meaning like not hedged. I've lost and made a lot of money doing pair trading. I mean, you can make and lose a lot of money doing both methods, being completely unhedged or being just like a pure like long only style trader. um i I think I'm doing a lot more trading for pair trading because you have to manage like um more positions in your book, and you have to like understand narrative rotation and like maybe some of the fundamentals, or why the fundamentals are weaker on these particular coins. So it's more work, and I'd like to believe that there is some alpha in that. Um, and so I wouldn't say like it's for everyone. Um, and I wouldn't say my system is perfect either. it's just something that makes sense for me, and so that's the kind of system I've been trying to improve over the past maybe year and a half.
100%. It's definitely not for me. I've kind of given it a shot over the last couple of weeks. I was like, let me long oil and short Bitcoin or something. And I mean, it was at one point, it didn't really make sense because I felt like even crypto was kind of holding well and it might bounce. And then it did bounce and oil nuked. Uh, so even though I was like, I didn't really kind of big amount in terms of risk, but it's definitely not for everyone, and it's better to just stick to majors, I would say. Uh, but yeah, back to lighter. Rajat.
I do have a question, Hansolar, on like the last conversation, regarding like all these new opportunities on chain. Traditionally, when we think about, these new assets listings, it's usually closer to TGE. Maybe because another perp dex has been seeing a lot of volume for that RWA, so, or for that asset. So, the every perp dex ends up looking to list that particular asset. When we think about these RWA opportunities, like the Korean stocks that were listed or oil is listed, um, how does the lighter team think about listing these opportunities? Like, how do you decide priority when it comes to these RWAs where data might not be as transparent as it is on chain?
And also, can you talk about the recent STRC listing? I think many were questioning how would the dividends be paid and stuff like that. And yeah, regarding the STRC as well.
So regarding asset selection, it's usually just, it's not as, complicated as people might think. It's usually just being on top of the markets and following the narrative. So if, something is becoming, or we think that it will become popular to trade, then we'll usually list it, right? So it's as simple as that. And then regarding, I guess, the question around STRC, so that is one where, so STRC, for those that maybe not don't know, is like, it's like a it's like a preferred stock. So it has it doesn't have any voting rights, but you do have priority over just like normal stocks when, say, MSTR goes bankrupt. Um, and so it's like in between a stock and like debt, basically. And then on top of that, you get, instead of voting rights, you get a dividend, like a yield. And so currently the yield is like, I think 11.5% or something like that. And there's been a lot of demand for that particular kind of level of interests in in TradFi, and so a lot of people have been buying it. Um, but the interesting thing is that it's not really pegged at like $100, which is what their peg is. It kind of fluctuates, and if people don't think that Sailor can pay the dividends out, then the price will go down. And if the market doesn't think that the yield is the risk isn't worth the reward, the yield, then there won't be any demand, and so prices go down. But if it goes over $100, then they basically sell some MSTR stock, and they fund the dividend and pay it out. So it kind of fluctuates. It's kind of like an algo stable coin. Um, and so that's basically how it works. If you look at like the history of the STRC price chart, it looks basically like a very unstable stable coin. So it'll like when people are kind of worried about the dividend side of things, or like the price of Bitcoin, then prices dip, and then it kind of like repegs to $100. And um so people can play that game. So people can like say, MSTR has a sufficient amount of cash on hand, and they could also sell stocks by doing ATM offers, at the money offers, and fund the dividends. And so if they want to bet that it pegs back to $100, they can try to get that spread. That's like one way to play it. Another one is when the dividends are actually paid out. So it's not like a continuous thing. It gets paid out like maybe like second week of every month. Each time that happens, the price kind of dips, uh, because they only pay out the dividend if you hold it at the point of the second week of the month. And so there's no reason to like hold it afterwards. Um, and you can just kind of like buy it closer to the dividend date. And so you could kind of play that game as well. So there's like a couple of different ways to like play the kind of um the depegging and repegging kind of side of things. So I think that's something that we may be able to see in for the next kind of dividend date.
Interesting. Uh, yeah, I think I've seen a lot more, many other listings on the art commodity side. I think you've listed quite a few equities as well. Uh, Anything that stands out in terms of like what you're seeing in the back end? Anything has changed in terms of behavior? Any metrics that kind of stand out since this drawdown in terms of understanding what traders are doing?
Since the drawdown of general markets like the S&P, I mean, and Bitcoin, of course, has been a pretty kind of significant shift in trading behavior, where uh, like the top 10 kind of traded symbols or assets on both hyperliquid and lighter has been it's shifted pretty significantly to RWAs. I think like 6 or maybe 7, like a majority of the top 10 assets are now RWAs. I think that's like a very um, interesting thing to see. So that's one side of things. Um, and obviously, like I guess people are kind of changing um, what they're trading on RWAs pretty quickly as well. So we're trying to keep up with that.
100%. It's just rotating from one thing. One day it is, I mean, a couple of months, for a couple of weeks, it was gold, then silver, then platinum, then uranium, and then it shifted to, trading S&P, then trading the NASDAQ. Then it was, and recently it is, some Circle, I think, like last couple of months was one of the highest traded volumes on at least Hyperliquid.
Mhm.
I mean, it's quite fascinating, obviously. Uh, Another thing that we, and I think we were talking about, me and Rachel, before as well, is lighter EVM. And last time we talked about some of the possibilities that can happen. And like Hyperliquid launched the builder codes, and they're being so successful.
Mhm.
And almost every perp text is trying to do something similar, whereas inviting others to come build on top of them. And it kind of feels like everyone's trying to do the same thing. Uh, but what's happening on the EVM front? Any new developments people should know about?
So I think for Hyperliquid, like I might get some of this wrong, but in my opinion, like one of the best things that came out of kind of um, opening up certain aspects of um, the Hyperliquid ecosystem, I guess, was allowing third parties to create um, different markets for Hyperliquid, with like Trade XYZ or like Ventuals, or there's a couple of others, right? And allowing them to kind of capture more kind of exotic markets, like the RWA side of things, and almost kind of giving away that market to third parties. I think that was probably the most kind of um the biggest outcome of like the hip 123 model. Um on the on the EVM side of things, I'm not sure how much traction or distribution that has actually like brought in, to be honest. I think that's still like kind of to be seen. Obviously like being implemented into like Ravi wallet and like the Phantom wallet. Obviously those are like big wins, but and I have seen like good like numbers on those as well, just because they have like a huge kind of like user base. So that's great. But um I'm still kind of skeptical on whether that is like the best kind of outcome for hip 3 and having like an EVM attached to a perp dex. And so obviously like the lighter team is also kind of monitoring that closely and kind of thinking of, what is the most kind of high impact thing that can be built when the lighter EVM goes live. There's a couple of kind of integrations that are almost ready. It'll probably be out in like, maybe 1 or 2 weeks. And that should be interesting to watch. I can't say who it actually is, but that is, a similar kind of implementation to what Hyperliquid did with builder codes, where they're
Yeah,
sharing some of the fees and revenues and that side of things. But I think, an integration of the EVM side of things with the perp dex, I don't think we've seen like the full kind of like the hit product that that perhaps we'll see in a couple of years just yet. I think it's still in kind of like very early experimental mode, and people are seeing what sticks.
100%. I think like perp taxes should stop like copying this. There's like no playbook. Everyone thinks like just because Hyperliquid kind of paved the way in this, they're building in certain way, everyone should do that. Because everyone like finding a trade XYZ for your decks is not going to be that easy. And right now, I think, as you said, right, like 7 out of 10 pairs are on trade XYZ. They are powering that, and it's kind of refreshing to hear from you that yeah, it can work, but team is aware of it because it can be kind of like at any point and just focus on the main product and not just building other some of these other composable possibilities that may come down the line, right? Like there's this huge opportunity to build on the EVM, and uh, yeah. And other thing is, you said like team is locked in, and also the regarding all the upgrades. And also, by the way, I love the lighter mobile app. I've been using it since it launched, like on day one itself. For the first couple of weeks, it was not that great, but I think now it's
Mhm.
like super good. I don't use on the terminal anymore. Like when I'm on the go, I use just it's so much better, and I think it's one of the best, at least Dex mobile apps. And kudos on that. Are you guys trying to kind of expand on that, because the no fee market is, I think, very significant. Is there any push happening in terms of like expanding into new markets where something like no fee perp dex can be more advantageous to them, where pushing the mobile makes ton of sense?
Uh, let me just reply to some of the comments you made before about the EVM before getting to that. Um, I think I said this on our last podcast as well. And when you think about the EVM side of say like Binance, right, and BSC, like probably like maybe 80 or 90% of the value of the BNB token comes from the perp dex, right? And maybe 10% comes from BSC, right? Nothing like substantive has really come out of BSC. And so I think you should focus on, your core business. As you said, I think that's absolutely correct. And that's the direction we're taking. Regarding like the EVM side of things, I think it's almost kind of like, I don't know if you guys might be a bit young to remember this. I'm a bit older, but there was this like time when web companies didn't have open APIs, right? There was an era when like Facebook had no open APIs. It was just like, they all the data they had was like, only used by themselves. And then they had this like idea of saying, oh, why don't we open up our APIs and people can like, use like say information from your friends list, or like people can like write posts and edit posts like programmatically through APIs. And so obviously that like proliferated like a whole bunch of like different side applications around like Facebook, and like a lot of other Web2 companies did this. And that again, obviously helps growth, but like most of the value again like comes from Facebook, right? And then maybe 10% comes from like these surrounding applications of being more open, right? And I think that's the same thing for EVM. That's like the same thing that's kind of happening right now. I think it's like a good direction to have, and like opening up the ecosystem to like third-party builders and having them able to interact with it in like a programmatic way. I think that's like a great direction, but it's just like the waiting is maybe sometimes people are a bit too focused on the EVM and think it'll solve everything, right? But again, like the core business is I think perps. And then coming back to your question about zero fees and mobile, I mean, I think the question you asked is, are there any kind of like opportunities or like geographies that perhaps would benefit from mobile and zero fees? And I would say every geography, right? who doesn't like zero fees and a great mobile experience? Like anybody with a brain, right?
Yeah.
Yeah.
Yeah, I think there's just a lot more untapped potential there, in my opinion, where probably your usual, not the person who's not on CT, who's not yet discovered something like this, or they're still trading on a centralized exchange because they're kind of restricted in a way, maybe, and they haven't yet discovered maybe doing a bit of on ground, some kind of marketing or promotional, maybe like how these centralized exchanges do. Um that may be helpful, but I'm not sure. Another thing, like we want to talk about buybacks as well. You mentioned earlier the start of the show regarding tokens and the lackluster price action and whatnot. Uh, how do the buybacks work for Lighter? And even, like the numbers are super impressive in terms of like comparison with Hyperliquid, how much has been bought back, and circulating supply and whatnot. But yeah, how does it work?
Yeah, I mean, like buybacks right now, I mean, we're doing somewhere around like, 60 to like 100K, 120K worth of lit a day. And it's been pretty consistent, since the start of the year. And so, I mean, like the people that are trading on Lighter are continually trading on Lighter. Obviously, there was like a drop off, you know, just after the TGE, where like a lot of the farmers left and things like that. But I think a lot of traders did kind of make Lighter their home, and even myself as like a pretty as like a full time trader as well. Sometimes like I would go on like other exchanges if they if Lighter doesn't provide the ticker or something like that. And at the back of my mind, it's always like, man, I really wish I didn't have to pay so many fees on the other exchanges. And so, a lot of people are saying things like people don't care about fees, like it's such a small like percentage, but it really does add up. And so I think that's where a lot of the retention numbers come from. That's why a lot of people stay at Lighter. and that's what leads to like the sustained kind of revenue and buybacks. Currently, we're doing I think close to 100% of lit buybacks, because we think, you know, right now is like a very undervalued price. So that's being done. But you know, despite the pretty aggressive buybacks, so Lighter is like one of the top, you know, revenue generating protocols, which, you know, doesn't even have explicit incentives at the moment. So I think that in and of itself is very impressive, and it's being shown in kind of the FDV, but not showing in kind of the price in terms of momentum, which I think has caused, you know, a lot of angst and kind of despair in the community. But that and the buybacks, which is also like a very high percentage of what we're earning. I think those two things are, you know, more than what, you know, 99% of crypto projects are doing. And so I think Vlad is doing everything that he can to kind of, you know, I want to be careful with my wording here, but you know, bring back value to the token.
Was
Yeah.
there any like we've seen this on CT, where you know the Helium team has stopped doing buybacks, the Jupiter team was questioning buybacks. You know, we had the multi-coin partners
Mhm.
on, Spencer and Cheyenne. They talked about, you know, buybacks. There was a big debate on buybacks being constructive or destructive, and that maybe those funds can be used elsewhere to grow the company.
Yep.
Have any of those conversations happened internally between Vlad and the team?
Oh yeah, I mean, absolutely. So I mean, like, stocks do buybacks when they think you know, the best investment opportunity is buying back the company, compared to, you know, whether it be capex or, you know, spending on marketing and growth, and things like that. Um, so obviously, like, you can spend money on those, but I think it's pretty kind of clear in crypto that the playbook is, um, you put the money back in the chart, right? And if that chart shows you know, good momentum in terms of price, then that is like the kind of the flywheel mechanism that brings in more people. I think that's like it's like maybe a bit of a Ponzi-esque view of crypto, but you know, it comes from a background where tokens don't have defined kind of value accrual mechanisms, right? It comes from a background where, you know, every token had to be like a meme coin with like absolutely like no value attached to it at all. And so you kind of have to prove, you know, twofold to the users that, you know, we're serious about, you know, not siphoning off the revenue to equity holders, but rather to token holders. And so, you know, if the norm was, you know, like a very structured kind of like well understood kind of mechanism, like in stocks, like obviously you wouldn't burn so much money buying back your tokens. But I think in crypto, that's just the kind of environment we're in. We're in like a very low trust environment with
Yeah.
regards to you know, how the team uses tokens, and so you kind of have to prove to the market that we're serious about you know, accruing value back to the token.
And it's still too early to tell, in my opinion. Like, some of these companies have been doing buybacks for years, and Lighter has been doing it for what, just a couple of months now. So it's still too early to tell, but appreciate the transparency there. Uh, but yeah, I mean, Lighter is my primary venue as well, and I know so many of my friends in communities. Everyone is trading on Lighter itself. Like, doesn't matter even after TGE. I think it's like one of the best places, at least to trade the majors and
Yeah.
some of the big commodities. I think that's been kind of the best place in my opinion. Uh, but yeah, I think we're at time. Hansolar, one final question for you. Team has been shipping a ton of features. I mean, every day, every week, we see something new and significant as well. But what's like the big picture you would say for 2026? Like, what's next for Lighter? You would say that people should be looking forward to. Like, there's obviously a core community. Everyone's looking forward to something big happening. Anything you would like to say in terms of developments or updates that even you personally are looking forward to?
Well, as a trader, I mean, like the biggest thing that I'm looking forward to is a kind of deep liquidity on the spot markets, and then having and being able to use that as cross margin. So universal cross margin would be my number one pick. You know, I think FTX had like the best implementation of that, where it was absolutely seamless. And you know, even Binance and Bybit, I think are still clunky in some regards. So I think that's like, you know, being a bit controversial. I think that's like the North Star you point to. You want to have like universal cross margin as smooth as you had in FTX. And so I think that's something that I'm really looking forward to. Um, and then obviously, like when it comes to having more spot liquidity on Lighter, I think being an ETH2 also helps. So being able to kind of you know, transfer or utilize a lot of the TVL on Ethereum L1, which still holds, you know, the largest amount of TVL. Being able to utilize that as margin on Lighter is a huge unlock. So I'm looking forward to that. And then another kind of big theme going into, you know, 2026, I think would be more on the kind of regulatory side and RWA side of things. Again, these are all very kind of like obvious kind of goals and milestones, but I think Lighter is like very well positioned to attack those kind of goals, whether it be due to, you know, their the investor network, or, you know, Vlad being becoming more involved in you know, the legislation side of things. So, you know, unlocking, you know, the US markets, you know, if that happens, I think it can be very big. And so I'd be looking forward to that as well.
Awesome. 2026 year of the perps, everyone. That's Hansolar from Lighter. Thank you so much. It's always a pleasure to talk with you and chat about markets and what's happening with Lighter. But yeah, this was awesome. Thank you so much, man.
Yep. Thanks for having me. And see you guys in the books.